Good afternoon, folks. Tommy O'Brien coming to you live from TFNN. Thanks for joining me this afternoon. We got about an hour left to go in the trading day, and you got markets shopping around right near record highs. S&P's up by 16 points right now. We're trading at 76.07. And how about the VIX? 1582. Now, the VIX is predicated on the S&P, okay, in terms of what is trading lower today. Yeah, how about the chip stocks? Micron, 8.5%. Intel, 6%. Lam, 4.8%. SanDisk, 9%. Seagate, 7%. Western Digital, 9%. AMD, 4%. Quite the pullback when you look at the chip sector. AMAT off by 3.7%. Okay, you jump around to some of the biggest equities out there, though. How about Apple? Up 4%. Microsoft, 3%. Amazon up by 3%. And Google up by 3.4%. A little bit of a rotation going on in this market. Now, I bring that up. It's in tech stocks under pressure. You have a NASDAQ off by 0.5% right now. Off 137 points, 29,652. You jump over the semis, the SMHs, down 2%. We take a look at this thing intraday. You trade all the way from 610 pre-market, 615 at 3 in the morning. But you come into the opening bell at about 607, and we're at 575 by midday. And right now we're down by $12. But NVIDIA, you rebound to get flat. But how about Apple, Amazon, Microsoft, Apple shares? That's a record, folks, just since I was coming on the air, up $13.56. I mean, remarkable. You get this size of a company just moving this month, and now you're approaching $5 trillion. This thing's got 14.6 billion shares outstanding, and you're up $13 and change today. Okay, 42. That's $182 billion today alone that this equity is up. Apple shares up by 4.3%. We jump over to Amazon, up 2.9%. Amazon approaching 2.7 million. We take a look at this thing. And yeah, still well off the highs at 278. You bounce from just under 230. We got some volume at those lows. Now that's the weekly. On a daily basis, you had a nice sign of strength on June 26th from those lows. All right, you trade the lower price. You trade on June 25th to 225.55. The next day, the low is 226.13. We accelerate higher, and you do it with volume, and we take off from there. Amazon shares up by 2.9. You take a look at Microsoft today, jumping around. Now, Microsoft, you talk about underperforming, but not today. Up by $11, up 2.8%. But, yeah, this thing's been struggling, man. The one thing you have is you got support at last April tariff lows. Remarkable that you make it up to 555, and in the span of a heartbeat, you're back to 349. We're bouncing, and pretty similar in terms of the volume. Right, a lot of headlines driving this market. That June 26 rally, you take off, and we're pushing 395. We touch a high of 398.96 today. All right, we jump over to yields right now. A little bit of higher price, lower yield, but I say a little, folks. It's a bounce, and it's a decent bounce. And yesterday we had some volume. Okay, and today we're going to get some follow-through with some volume. You're up by 12 ticks, the 10-year. You're at 109.10. That puts the 10-year yield at 3.54. Okay, 3.54. I mean, we came into the war at 4% 10-year, right? The hope was to get it down from there. And here we are, sitting at 4.54 right now on the 10-year. The dollar is pulling back. It's quite a decisive move on the dollar today, the last couple of days. But we'll see if 100, that's been your area of support or resistance. We're back to 100.43 on the dollar right now. And with that type of weakness in the dollar, you could have expected more of a bounce in gold. You know, you get a bounce intraday. Oh, boy. You know, we got quite a move in the dollar right now, and it's just not happening in gold. Now, the yen strengthens a bit. When the dollar weakens to that degree, you have a yen down 244 ticks, 162.02. But discouraging not to see gold really take that opportunity. If yields move, if the dollar really gets a pullback, but the market just hasn't moved, hasn't broken a technical level just yet. Gold flat on the session, and silver. You know, you bounce, but you bounce from the lows of 56.92. Silver down by 75 cents on the session, trading at 58.34. All right, we jump around to some of the headlines. So PPI fell 0.3% in June. The market was thinking it would be unchanged. Core PPI was up 0.2%, less than market was expecting. And yeah, that follows up a CPI that was weak as well. So you get a double bagger where you get CPI weak, PPI weak. and yields abate a bit. But you know what, folks? They have a long way to go. Because check out this. Mortgage rates. The highest level in nearly a year. So, yeah, we have like a 1 to 2 day reprieve going on right now. But we need more than that, folks. The average contract interest rate for 30-year fixed-rate mortgages, 6.65%. Imagine that. You buy down a 1.5 and you're still paying over 5. Applications for a mortgage to purchase a home down 7% from the previous week, 2% lower than the same week a year ago. And last year, rates were just 17 basis points higher. So no one's refinancing. And it's an expensive payment. And it's a decent buyer's market right now, depending where you are. The K-shaped economy is real. In terms of on the top end there, right, with equity prices literally pushing all-time highs. Refinance share mortgage activity increasing. It just shows how little activity is going on for people using a mortgage to buy a house. And yeah, inflation's a problem. Well, Mr. Warsh, he was in front of the Senate today taking questions. And some good answers. I like the way he talks. We'll see what he does when it comes to action, because everything so far is pretty canned. Not really giving a lot out there, more than you'd expect. The independence of the Federal Reserve is sacrosanct. Part of the reason for the Fed's power comes not just from a printing press, though it can be useful from time to time. It comes from our credibility. Credibility to make the best choices we can consistent with the law that you've written for us. Well, we're at 5 years and 3 months that inflation's been above 2%. 5 years and 3 months. And the whole idea that AI is just going to, productivity is real, okay? Productivity brings down prices. People do more with less. They're able to offer more services for less of a price. But how do you think they're going to make back all of the CapEx they're spending right now, right? And they're going to make it back, and they'll make it back then some. But boy, inflation's a problem, not coming down just yet. Yields easing a bit, and we still got the 10-year, though, at 4.54, folks. We're coming back. We'll take a look at some equities.